I know you have learned a lot of things about liquidity sweep in the market already, but in this video I'll be showing you how to join liquidity sweep and market structures together in order for you to trade it and make a whole lot of money from the market also. So let's get into the video. Let's not waste much of our time. But in case you're new to the channel, you haven't come across my video before, my name is Philip Joshua and I'm here to teach you on everything that you need to know about the forex market. So if you're new to the channel, don't forget to do what? Hit that subscribe button and don't forget to like the video so that more people can get to see the video, and don't forget to share the updates with your friends. Share this video with your friends so that they can get to watch it also and get to know how these things works in the market also, guys. So let's get into the video. Let's not waste much of our time. But in case you don't know what is liquidity sweep in the market, liquidity sweep are just areas whereby market comes, break former structures, then we get new structures. That's the major work of these liquidity sweeps in the market. And when it comes to market structures in the market structure is just the behavior of the current flowing in the market at that point. That's if the market is kind of buying or selling the market at that point, it's a result of the current that is flowing in the market at that point. So let's get into the chart right now. Let's get to do this once and for all. Then from there you can get to understand how to join these two things together and make a lot of money from the market also. So let's go now. Alright, this is a perfect example of a liquidity sweep and a market structure in the market. But I'd love to explain it for you so you can get to understand it and get to know how these things works in the market. So when it comes to market structure, we have swing low, we have swing high, we have rally, we have base, we have drop in the market. That's the 5 things that you must know about market structure. And when it comes to liquidity, we have that area whereby we expect the market to liquidate. Then from there the market now get a retest to the liquidity sweep zone. Then from there the market now start dropping in the market. So in this place now, I would love to explain it for you so you can get to understand it faster also. So looking at this thing, this stuff that look like loss in the market, I want to use it and explain it for you so you can get to understand it faster. So around this side now we have what? We have a swing low in the market. We have a swing high in the market. We have another swing low in the market. We have another swing high in the market. But you don't get to call all of them the same thing due to the fact that they are forming different things in the market. So when it comes to this swing low and swing high, we get it whenever the market is in a continual trend in the market. And looking at this place, you can see that the market is rising, but currently the market is about to change its direction due to the fact that there's a strong resistance zone around this place that is in control of this change of market direction. But I'd love to just go straight to the point. Let me not waste time. This place now whereby we have a market structure in the market, let me get to explain it again with that cross sign so you can get to understand it faster. So around this place now we have what? Our last swing high in the market, and around this side we have a base in the market. So from this side to this side now is called rally in the market when it comes to market structure. And this place now whereby we have a major area which is looking like a head and shoulder pattern in the market is our base in the market. And this other side whereby the market is going toward the downside now is called our drop side in the market. So look at it now. Rally, base, drop. So around this place whereby we have our drop in the market, we expect the market to come and get a retest around that side. Let me bring out my horizontal line so you can get to understand it faster. So around this place now, we expect the market to come to this zone and get a retest around that place. Then from there, the market will now break that structure, get a new structure, and from there we have our swing low and swing highs in the market. But in this market, it wasn't the same thing. So let me get to show you what happened in this one. So in this case, we got the market. Instead of the market to come and break this former structure around this place, which is this one around this side, instead of the market to break it, then get that retest around this place and continue going towards the downside, the market came around this side and got to form some candles that look like a rejection candle in the market. Then from there the market started dropping instead of getting a retest around this side, which is our 301.0600. Instead of the market to get a retest around that side, then drop to the downside properly, the market came and behaved as if it was going to go by this side. So look at what happened right now. So now that we're expecting that the market should get to this our 301.0600, the liquidity sweep came in the market. And how did the liquidity sweep came in the market? Because this area now is a liquidity point in the market. This place where we got some candles that look like a retest around this place became our liquidity zone in the market. And we expect the market to do what? Clear that liquidity zone, get a proper retest around this place. Then from there the market now continue going towards the downside. And if you go back to the definition of liquidity sweep in the market, you get to understand that it breaks former structure and gives us new structure in the market. So right now, instead of the market to continue falling, if at all you got a retest around this place at that point, the market is now going towards the downside. And this is not a proper trade, and this is where a lot of traders do mistake and expect that from there the market to continue going towards the downside. And this is where they get to lose a whole lot of money from the market. So when the market came around this side now, this other side in this place whereby we have a pin buy in the market, the market cleared this pin bar and got a new structure around that place. So when the market cleared this pin bar, we got a what? Engulfing candle around this place, telling us that the market is going towards the upside. But to some people, they will still enter their trade around this side in the market because they feel like this side now, this place in the market, will be the place that will push the market towards the downside. Because this place is now looking like a retest point whereby the market should just get a retest. Then from there, the market now start dropping towards the downside. And this is where a lot of traders get liquidated because the market makers are ready to clear a lot of traders around this place, especially those ones that are holding the trade already, thinking that the market is going to go towards that direction. Then once the market clears this place, which is this place whereby a lot of traders are into the market already, expecting that the market to now drop towards the downside whereby they're expecting the market to get to. Then the market now from there get a retest around this place, so we have our drop area around. And this place whereby we have our drop area around is also our liquidity sweep area in the market. Because due to the fact that the market did not come and get a retest around that place, like a proper retest telling us that the market is going to fall from that side has become a liquidity sweep area for us. And this place whereby a lot of traders got liquidated in the market becomes the place whereby the liquidity sweep happened in the market. So those traders that does not understand how this market structure works in the market, they will get to enter their trades around this place. And as the market has come back to this place and got a retest around this place, liquidity sweep has occurred in the market already. Because the major function of the liquidity sweep remains to break former structures, then from there get new structures. And this place is looking like a former structure whereby the market came, behave as if it's a confirmed retest area, then from there the market even came around, behaving as if this place was going to work. To some traders that might even see this place as a sniper zone for them, then they will get to stacking a lot of trades and expect the market to go towards the downside. And if the market breaks here now, they will just get angry and be like, the market's against them. Why they don't know that the market is expected to get to this point, whereby we expect a liquidity sweep in the market already. So around this place now, since the market structure failed to get a retest around this place, then start falling towards the downside immediately. But since the market structure failed us at that point, the liquidity sweep takes over in the market. And this is where a lot of traders get to make money, especially those ones that understand how this liquidity sweep works in the market. And to some traders, they might even feel that the market is not going to go to the downside due to the fact that they feel like this place that has been broken in the market is a failed area already in the market, and they expect the market to continue pushing towards the upside. But that's not the main thing to do in the market because this market is currently changing its direction due to the fact that our base is still active in the market, which is this place in the market. This side that we have our base is still active in the market, we still expect that the market will get towards the downside. And look at what the market did after that. The market started falling from there towards the downside, and we had massive sales in the market. So those that entered this trade and expected this place whereby my horizontal line is in the market, we get to make a whole lot of money from there because from year to year it's a whole lot of money in the market already, and if you get to trade it the right way, you get to make money from it also. So that's one thing about this market, and that's how it works in the market also. So at this point, the market structure zone became a liquidity zone for us, and we got a retest around that market structure zone, which is this place whereby we have our drop side in the market, which our base is still active in the market, telling us that this market is still going to go towards the downside. Then from there we got our retest towards that point, and this side is the place whereby the market got to liquidate, which is the traders that entered the trade around this place, thinking that from this place the market is going to go towards the downside, and from there the market continue going towards the downside. So that's how this works in the market, and it's very simple. If you don't get to understand it in this first video, you get to watch it over and over again so that it can stick into your brain and you can get to know what to do whenever you see this in the market also. Because mostly a lot of traders used to enter their trade around this place, and this is why a lot of people fail in the market, because they think that from this place the market will now start falling towards the downside, forgetting that there's a pin bar around this place and there's a base around this place. And areas where we have base in the market are very respected in the market. So if at all I was to enter this trade now, this place whereby our base area is in the market, that's the place whereby I will be placing my stop loss around, because I know that if the market just cross that place, the structure becomes invalid in the market. But since the market is still valid around that place, the market came close to that place and didn't get to break it, then this market movement is a good one. And from there you see what the market continues to do. We got another area around this place whereby the market came, got a retest around it, which is this side in the market. Then the market broke this former structure also, got some continuational candles around this place, and the market continued pushing towards the downside. So that's how this works in the market. Let's get back to the video. Let's get to conclude it. At this point, I believe you have learned a lot of things on how to join liquidity sweep and market structures together in order for you to get good trades in the market. So what I just want you to do for me right now is Learn on how to use this properly on your demo account before you try anything on your real account. And don't forget, this is an educational content and you have to kind of watch it over and over again in order for you to get to understand these things and understand how it works in the market also. You can download the video for yourself in order for you to get to watch it over and over again until you get to understand these things in the market. So that's all for today's video. If you're new to the channel, don't forget to hit that subscribe button and don't forget to like the video, and see you in the next video, guys. Peace and love.